Palantir, if we talk about Palantir, like, why does this stock continue to move up? Well, first off, the company's revenue just kept decelerating in terms of growth for the longest time, right? But suddenly, about 6 quarters ago or so, growth inflected positive, and we started to accelerate revenue growth, and then again, and then again, and then again, and again. And now people are starting to think, with DOGE, the Department of Government Efficiency, the relationship that Palantir has, and Peter Thiel, and Elon Musk, and all this stuff, people are running to some assumptions now that Palantir might get to 40% plus revenue growth, which now they're at about 30%, right? And if that happens, Palantir's got more room to run here. Like, if Palantir all of a sudden gets back to 40% plus, look, I shouldn't say get back to. Well, they would be back to, right? If they go 40% plus revenue growth, Palantir is going $100 plus. Like, that's where their stock's going. If they don't do that, and they keep coming in the 30s, and we're probably going to stagnate for quite some time, if they ever go back to the 20s again, we're going to crash. At least in terms of, like, if they all of a sudden came in with a quarter that, like, revenue was up like 25% or something like that, like, the stock's crashing. Like, it's going to be an epic crash right down to $30, $40 a share, right? But for now, it's optimism. It's hope. Like, what if we get back to 40% plus revenue growth, right? Like, that would be insane. And so that's what we're running off of. Now, I am a little skeptical of this as a Palantir shareholder, of this thought that we could get back to 40% plus growth. And here's why. I'm seeing some of the activity here recently, right? The chief technology officer, Big Dog, executive vice president, he's usually always on the conference calls. He talks probably the second most about Palantir other than Alex Karp, right? He recently offloaded 5.2 million shares of Palantir, it says here, for $367 million. Now, you know, a lot of times I don't really care that much about insiders selling or, you know, selling stocks especially, because it could be so many reasons. But this one was pretty substantial. 5.2 million shares, only holds 752. I'm like, if you really thought Palantir was going to get back to 40% plus revenue growth, I don't know why you would sell your shares. That just doesn't make sense, right? Unless you think you're going to kind of be like a 30% grower, and then that puts your stock in a tough situation, or especially if you think you're going to go back to the 20s, then it definitely makes sense for him to cash out here, right? Alex Karp, this one also came out last month, right? Alex Karp sold about $400 million worth of stock, not a small number. So when you see stuff like this makes me a little skeptical, this thought process of like 40% plus revenue growth. I hope it happens, but not that optimistic, especially when I see stuff like this, right? I'm like, you know, we're probably going to have really good growth rates, probably be in the 30s for the entire year of 2025, and then we'll see what happens in 26. But, you know, I don't know. I don't see it in terms of that 40% plus growth, but I hope I'm wrong in regards to that, right? I just don't think I am. Nvidia, look at this. Nvidia falls into correction territory, down 10% from its record close. Folks, I show you this because this shows you how fast sentiment can shift in the market, right? Everybody and their grandma wanted Nvidia stock 6 months ago, going into this year, going into last year. Like, everybody wanted Nvidia. Like, it was the play. Before it was Palantir and Tesla, it was Nvidia, right? Everybody wanted Nvidia. And look at this. This stock's now in correction territory while the Nasdaq's blasting off to all-time highs. Who could ever thought that? And did Nvidia magically report bad numbers? No, Nvidia's last numbers were great when they reported last month. The guidance was phenomenal. The conference call was phenomenal. There's nothing you could say bad about it. It was banger across the board. And look at the stock's in correction territory with a Nasdaq at its all-time highs. This shows you sentiment can shift fast. So if you don't think sentiment can shift very quickly in regards to Palantir, Tesla 6 months from now, like it happens quick, man. It happens really quick. And what's also fascinating about that is Nvidia a lot of times moves upward when Bitcoin's moving forward, downward. You know, you could actually follow Bitcoin and Nvidia over time. A lot of those times when both are going up, they're both going up, right? And then when one's going down, the other's going down. Like, it's absolutely fascinating how that works. So you got Bitcoin at all-time highs, Nasdaq all-time highs, and we got Nvidia that's just like doing what? Like in correction territory? That's insane, right? No. I don't know how many of you guys have seen this before. Hopefully a good amount of you guys have seen something like this. Market cycles, right? And this is how noobs think in regards to a market, right? You know, you kind of get in a stock, it starts going up, you get optimism, like this is real, you get the belief phase, let's invest it all, thrill, everyone buy now, and then euphoria, I'm going to be rich, right? And that's the market cycle, right? Then you have a downtrend, then it comes back a bit, complacency, let's coast a while, right? Then it starts going down again, you get anxiety, like, oh my gosh, I'm freaking out, like what's going on with my stock here, or asset, right? Bitcoin, whatever it is. Then you get into the denial phase, it'll come back, like it's just down right now, right? And then you start to panic because it just keeps going down, capitulation, I'm done with this thing, right? And then you go through the anger phase, like whose fault is this? Like, can't be my fault, right? And then eventually you end up accepting fault for it, right? And you realize, oh, this is my fault. I was in this asset. I thought it was good price. It was bad price, right? And, I'm an idiot phase, right? Then, things start to come back and it's like disbelief again, right? And so this is how noobs think in regards to the market. And so this is phases that happen, right? And I watch this, as a Tesla investor, I watched this whole phase play out before in Tesla stock, right? This whole phase, I watched this play out at the end of 2020 into 2021, right? And then we went through this phase. And then we went through this phase on Tesla, right? And if I took you back, 2 years ago in Tesla sentiment, 2 years ago Tesla was barely over $100 a share. I could tell you it was in some phase around here, right? Anger, depression phase, something like that, right? And even the sentiment a year ago in Tesla was still pretty bad. Even 6 months ago, it was still pretty bad, right? But now we're back into one of these phases in regards to Tesla. Just the debate is where are we at? We have belief, we had thrill, or we had euphoria in regards to Tesla, right? I watched the same thing play out in regards to Palantir, right? Back at 2020, 2021, people were in this phase in regards to Palantir. Then it went through its crazy crash in 2022, and that's when investors like myself stepped up and started to buy the stock, right? And meanwhile, people that have been holding Palantir for years, they sold all out completely. Or the ones that held through were usually in these phase of like anger, depression in regards to Palantir. Very few were like really, truly optimistic about the long term and those sorts of things, right? And then when Palantir did start to go up, a lot of people were in disbelief. Like they went through that whole phase of like disbelief and then it was like, I don't think this is going to last. Like what's going on here? This is what you go through in market cycles. And this is, this will play out again in Tesla. This will play out again in Palantir. This will play out again in Nvidia. Like it's just one big game of going through this roller coaster ride of emotions, right? And you usually know you're toward the top when people start. I usually know when we're toward the top of a cycle when a few things I look for. We're toward the top of a cycle. Now to call the top is difficult, but when you're toward the top when I have countless people around me, friends, family members, whoever, who are telling me to buy Bitcoin. I've had so many people tell me recently, buy Bitcoin, babe. Where were these people at 2 years ago? No, none of my friends or family was trying to say, go, you got to buy Bitcoin right now. But now all of a sudden, everybody, hey, you got to buy Bitcoin. Go big on Bitcoin. Last time I saw that, guess what? Was about 6 to 12 months before Bitcoin had an epic fall, right? Now we're in this cycle again where, people are throwing out these massive price targets, right? Tesla to 10 trillion, right? Palantir to whatever trillion. Just people are throwing out really, really, really wild calls, right? And you can throw those out in this sort of market where, these sorts of risk assets are doing very well. But as soon as things flip the other way, people will run from those, right? That's what ends up happening, right? You got to, at the end of the day, I'll show you how I think, okay? This is how I process as somebody that's been investing in the market 16 years. I run numbers. I research companies. I listen to conference calls. I listen to investor presentations, right? I run numbers. I run projections. I do SWOT analysis on all my companies, look for the strengths, opportunities, threats for all these different companies, right? And we go ahead, we see if it's a good price, if it's at a fair PE, what I should get for likely a compounding annual growth rate. I run some different scenarios. I run a base case, a bear case, a bull case, an ultra bearish case, and an ultra bullish case. And then I look at everything over and I say, okay, this makes sense to buy this asset. Or this makes sense to sell this asset. That's how the real money plays. That's how the 1% plays. All this other crap is just crap. And this is how the masses think. This is how the masses invest. This is how the masses invest. You gotta back it with numbers and data. You gotta do different scenarios. What if things go much better than expected? What's worse than expected? This is how you gotta process your information. To play this game is a losing battle because what you're gonna just do is end up buying crazy here, You're going to end up selling crazy here. You're going to end up leaving the market. And we know we lost a lot of people in 2022, right? There was a bear market we went through. It was nasty, especially for a lot of the popular growth stocks. It was a nasty market. We lost a lot of people, man. A lot of people. And I don't think those people have returned. Or if they have returned, maybe they started returning recently, which is very, very scary if that's the situation. But that's what plays out. And so you got to understand this is just one big game, and you got to know how to play the game, right? Now, if you're wondering how much longer can this market last, right? Well, here's some data. So if you didn't know, I was born in 1989, barely made the 80s, baby. The 80s, what a time to be alive. I barely made it. So I said, since I was born, right, which I'm 35 years old now, what's happened with the market after you had a down year, right? Well, I came into the world and the market was booming, baby. We were up 27% in the S&P 500 when I was born. That's what I'm talking about. And then right after that, we had a big dip. Well, big dip. 6.5% S&P 500 went down. That was followed by 3 up years. Then we had a down year. Not a big down year, down 1.5%. It's like nothing, right? And then was followed by 5 up years, 34%, 20%, 31%, 26%, 19%, right? So we had a 3-year bull cycle, 5-year bull cycle. Keep these numbers in mind, right? Then we had the tech bubble crash. Epic, arguably the most epic stock market crash of all time, certainly of modern times, right? The only thing you could say in relation to that is like Great Depression type stock market crash, but the tech bubble was a 101 in modern times, right? Down 10%, down 13%, down 23%. Now, what was that followed by? 5 up years. Then we had a down year, great financial crisis. Boom, 38.5% down. That was followed by 6 up years. This one says 0%, but technically it was up in 2011, okay? Technically, based upon the numbers here. So we had 6 straight years up after a down year. Then we had a down year, slightly, 0.7% in 2015, followed by 2 up years. A down 6% year in 2018, followed by 3 up years. Then we had our big down year in 2022, down about, a little under 20% there. And so far we've had 2 up years, right? So the moral of the story is, and this is really in modern times in the stock market, a bear run is usually 1 year. And then those are followed by 3 to 5 year cycles upward. So we've now had 2 years. So if this is a normal bull market we're in right now, we probably have another year to 3 years left in this bull run, okay? If this is a normal bull run. That's something to kind of keep in mind there. I just took you through modern times. Like, if it plays out how it usually plays out, we might have 1 to 3 years left here. But with that being said, it does not mean it's smooth sailing. Because by just looking at the overall numbers in a given year, it can give you a false assumption that the market was all stable. Not necessarily true. For instance, Tom Lee made some waves last week, and Tom Lee's known for making a few waves in the market, right? He made some waves because his 2025 projections came out for what he expects for the market. And he expects the market to blast higher at the beginning of the year. S&P 500 to go to 7,000, followed by a crash down to the 5,000 range, which would be steep and severe, followed by a Q4 rally, right? Back to 6,600 in the market. So I don't think this is far-fetched. I think this is a very possible scenario Tom Lee has. I don't think this is crazy at all, right? At some point in 2025, reality is going to set in, right? And I think at some point, there's a high probability the market's going to get freaked out, right? I don't know what it's going to be about. Maybe it's about tariffs, right? Because right now it's just talk of tariffs. There's nothing actually going through because Trump's not in office. What happens when Trump's in office and tariffs are actually going through and companies have to start to react to that, right? And companies have to say, oh my gosh, we're having to ship production, we're having to do this, blah, 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 okay? Tariffs, maybe that's it. Earnings, maybe all of a sudden we get an earnings malaise in the second quarter or third quarter or something like that, right? That kind of leads the market to be like, oh man, like we're going to have trouble hitting S&P 500 targets for earnings. Maybe it's that, right? Maybe we get inflation to start coming back in the middle of the year. And all of a sudden oil price starts going beast again, right? And you get a commodities bull cycle again. And that would lead to a lot of fears around inflation, which then would lead to fears around the Fed pausing, right? Then that leads to a lot of fears. If the Fed pauses and they announce they're pausing for now because inflation's coming back, people are going to freak. Like they're going to absolutely freak out because they're going to view that as what's the next step for the Fed after a pause? Up again. So they're going to start to worry about, oh my gosh, like we're in the 1970s again. Inflation's coming back and the Fed's going to have to start raising rates again, maybe higher this time than they did last time, right? that would lead to a whole situation. You could have maybe an over-leveraged situation happen or something we don't even see coming, right? But I would say there's a pretty good probability it's going to be something or multiple things that happen throughout 2025 that will get the market to shake up in quite a substantial way, right? So my guess is the Trump honeymoon wears off, sometime shortly after he's in office. I don't know if it's like 1 to 3 months or more 3 to 6 months or more 6 to 9 months, but I believe shortly after Trump actually gets in office, that honeymoon phase will wear off, right? Which the honeymoon phase, we're in it right now, even though he's not in office, and then we'll probably be in it very shortly after he gets in office, right? And just a lot of optimism about everything's going to be better. And then, slowly but surely people will realize, these things take a long time. If you are going to change any policies, it doesn't magically fix things overnight, and they're going to start to realize, oh crap, we priced in a lot here and it might take a long time, or certain things might not get through that people thought were going to get through. And they're like, oh, dang, this isn't happening, right? So that's my guess, right? And then the VIX starts spiking and then fear starts breeding fear. We haven't had any fear for a while, right? Now for 2 years, we've been in an upward bull market, which means people are just getting more and more optimistic. The longer a bull market goes, the more kind of euphoric people tend to get, right? Which the more euphoric people tend to get, the more when you do get a fear phase, it starts to be taken really serious really quickly because people haven't felt it for a while, right? In 2023, for instance, it was hard to get people that fearful because we already went through 2022. Let's say in late 2020, it was hard to scare people in the market anymore because we already went through Rona. So we already felt like we went through the worst of it in the first half of 2020, right? So that's something to kind of keep in mind there. That's my guess and kind of what happens with the market, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. I can do it. You can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. Let's get into Julian Emanuel.
To be here.
So the warning is beware January because it's not going to be a straight line higher.
So I wouldn't call this irrational exuberance, but we've seen there are pockets of exuberance. The Conference Board survey actually showed the highest reading ever of people that think stock prices are going to be higher a year from now. That's the kind of cautionary, and just for reference, the formerly highest reading was the beginning of 2018, and there's been a lot of discussion of 2018.
So what he's saying here, stocks could fall 8 to 13% early next year. So what he's likely saying there is the S&P 500 could fall 8 to 13%. So, if you get, what's the midpoint there? 10.5%. If you get a 10.5% fall in the S&P 500, keep in mind for a lot of actual individual stocks, we could be talking about 15 to 30% downside, right? So just a little food for thought in regards to that. Cites high valuations, Trump policy uncertainty, plans to buy weakness. What's he talking about 2018 here? I love when we talk about 2018. I love it.
It's the beginning of 2018, and there's been a lot of discussion of 2018. And when you think about the policy backdrop of the incoming Trump administration, it's pretty easy to make the case that we're going to get a little bit of volatility to start the year.
That's wild, because in that 44-minute video, at one point in that video, I brought up 2018, remember? I brought up 2018 and started talking about that a little bit. That's fascinating.
That is exactly what Lori was talking about, 2018 being the comparison year. What's your price target, Lori?
So we're at 6,600. We also have a bear case of 57.75. And it's interesting. There's as much interest in my bear case as there is my target, just because I do think there is a lot of nervousness about sentiment. There's a lot of nervousness about valuation, but that runs counter, to the strong animal spirits, economic upgrades that we're seeing.
So I would just say, and this is a positive, that clients are very, very focused and very concerned about valuation. And as all of us sit around here, I dare say we have been nervous about valuation, all of us, probably for the last 6 months. Valuation alone doesn't end the bull market, but what it does is it makes it susceptible to any sort of less than perfect news, which, the amount of geopolitics that we have going on, and what happens if someone says, Fed Chair Powell, do you think there's any scenario in which you might hike interest rates next year? Mm-hmm. How that question gets answered on Wednesday is going to be pretty informative.
Dan?
Yeah, so we have the fateful eight here now.
What happens if someone says, which, the amount of geopolitics that we have doesn't end the bull market, but doesn't end on Wednesday.
So I love that there's a lot of clients there that are talking about valuation. That means people are more focused on being a little more sophisticated in the market, right? And if you don't really know about valuation, you don't know how to make that case that maybe you're overvalued or something like that, then you're not really very in tune with the market, right?
Going to be pretty informative.
Dan?
Yeah, so we have the fateful eight here now. Broadcom just had this thing. It's trending. Does it worry you a little bit that those 8 stocks are about 20% of the S&P 500? I know we've been talking about concentration, but if you're talking about valuation, they're also a really important component of the S&P 500 valuation. We've seen massive multiple expansion. They're about 40% of the S&P 500. So 20 trillion, 8 stocks, 40% of the S&P 500 that are making up a lot of the expected growth in the index next year.
It's definitely a concern, and we all know there's one stock in particular that's had an incredible run-up since the election. It is now trading over 200 times earnings, and I dare say that that's a consideration and a worry no matter what. But again, it's one of these things where if you think about it, I think we were all amazed when, say, the top 5 stocks in the weighting in the S&P 500 rose beyond the Y2K peak. And think about how long ago and how many index points ago that was. Again, it's a question of you need other things. And it's in our mind, it's going to be, potentially irrational exuberance. We think the capital markets will show the way towards that if we get there, or a recession, which we just don't see in 2025.
Yeah, in terms of Tesla, right, you might ask, is that one I'm interested? I bet against Tesla before and made a lot of money on it, not nearly as much as I've made from the long side, right? But with this one just being, I think in the last 3 months it's up like, 100% or something crazy, up another 3-something% today, 106% in the past 3 months. Like, holy smokers, this ain't no dang jokers. Would it be interesting in going against Tesla again? Yes, but I don't feel comfortable quite yet. We need to get, in order for Tesla to start moving down, we got to get out of this Goldilocks period we're in, or this honeymoon phase, this honeymoon phase. Once we start to exit from this honeymoon phase, Trump is actually in office, right? The excitement over that, it's all happens, right? At that point in time, I could start being a little more intrigued about maybe opening up a put option position against Tesla. But the thing that gives me a little caution here is right now you still have the story being really exciting around Tesla, right? It's the second biggest position for me in the public count. It's doing tremendous, but it has a lot of story going on behind it right now. Additionally, on the fundamental side, we're looking at gross margins that are likely going to be increasing quite a bit in 25 versus 24. We're looking at likely net margins increasing in 25 versus 24, right? We're looking at likely revenue acceleration. So it makes Tesla actually a pretty hard stock to bet against in the short term, right? And that's why I'm having some pause to thinking about betting against Tesla and opening up a put position. It makes sense to hedge against Tesla at some point in time, but it's hard right now. There's too much story there. There's too much margin story, robo-taxi story, revenue story. So that makes it difficult to bet against it right now. There will be a time again when it will make sense to bet against Tesla and to hedge against Tesla, but right now it's a difficult It's a difficult thing to make, other than, well, the stock's extremely rich. Listen, man, Tesla always trades really rich. Like, even when Tesla stock is in a crash period, even when Tesla stock down big, people still say Tesla's really expensive because it's just the way it is. It is always expensive, right? 155 forward P on it, 2-year forward P 132, right? You could say even if Tesla comes in with better numbers than expected, what's the forward P? 140, 2-year forward P 110. Like, regardless, it's really extraordinarily high. So, yeah, there will be a time to bet against Tesla again. It's just I have a hard time making the case right now, other than the stock's gone up a lot and the forward P is really high. That's not enough. You got to have a little more than that. You got to have the story deteriorate. You got to have everything go back to fundamentals, and then you can at least start to talk about a potential of a hedge position against Tesla. But yeah, right now it's difficult, man. Really, really difficult.
U.S. exceptionalism has been the story for years now. Dollar at some point is a problem. Rates at some point could be a problem, but haven't really been so far. What do you think about the rest of the world? We know their politics in Europe are kind of scary right now, but it's been a lot of underperformance.
We are getting a ton of questions about the rest of the world. It started about really right at the election, because the assumption is in an America First president, you'd see more of this kind of performance, which you have seen. From our point of view, again, here, valuation relative or absolute, it's very difficult to just make the case that it's going to work on the basis of that. We would want to see in Europe a reasonably defined dollar top, which is something to certainly look out for. That may be driven by Trump's displeasure. You remember he got uncomfortable about the strong dollar during the first administration. In China, we'd really want to see bond yields stop declining. It looks very much like what you saw in Japan in the 1990s in terms of yields going lower than you could ever imagine. And then as far as Japan, what we want to see is sort of a separation between the way the Nikkei trades and the way the yen trades. And we think that's possible. It worked throughout the 1980s. But again, all of these are catalysts that we're waiting for the macro backdrop to change. And we do anticipate getting more positive on the rest of the world at some point.
Yeah, I just don't think you need to mess around with the rest of the world. I really don't, right? There's so much. Just with the U.S. markets, there's so much you have opportunities to. There's so many great companies you have the ability to own, right? There's so many great companies that are undervalued in the U.S. markets. There's good opportunities from the hedging side, right? If you need to bet against some stocks in the U.S. market. Like, I feel 0% need to mess around with anything international. There's so much opportunity always just in the U.S. markets that I'm like, it's a waste of time. And just because an index trades cheap on a forward P basis or a trailing 12-month P basis or whatever, it means nothing. It could trade cheap like that for 10, 20, 30, 40 years. Like, the Chinese stock market has looked cheap since I started investing 16 years ago. It's looked cheap. 16 years ago. It still looks cheap to this day. It's just the way that market trades, and it's trash. Like, you look at the Shanghai index, right? And that index has done nothing. Here we go. I pulled up an all-time chart here for Shanghai. So back in 2007, the Shanghai composite was 5,500. Here we are, 17 years later, and it's at 3,300. This is, shortly after I got involved in the stock market, right? I got involved at the very end of 2008 and got more involved in 2009, right? And back in those times, the Shanghai composite was a little under 3,000 and then was at about 3,200, 3,100. It's at 3,300 now. Like, imagine if I had just been put money in the Shanghai index all these years. Like, oh my gosh, would that be bad? And it's just brutal. So that's why I'm like, you could go through a lot of these indexes, man, they just perform horrible over 10, 20-year spans. If you can't perform well over a 10, 20-year span, there's no point.